Hello and welcome to the Stock Planner channel. Today I want to walk you through a real trade that I'm planning on using the stock Procter Gamble, ticker PG. This is a defensive stock, a maker of products that everybody needs, and I think it's an all-around good play based on our economy the way it is right at the moment. This is not a hype trade, it's not a day trade, and it's not one that you can win $1,000 in a day or two. It's a trade that's based on a set of rules that I use regularly. It's based on a checklist that I go down through, and it's designed to produce repeatable results with defined risk. If you're somebody who wants to trade calmly, avoid emotional decisions, and focus on process over predictions, and nobody knows how the stock market is going to go, this video may make sense to you. Even if you never want to trade Procter & Gamble or you're a beginner trader just watching, I think going through the process from beginning to end will be helpful. So let's get started. And remember, this is not a trade recommendation. It's not a prediction. I'm hoping that you will learn how to do this on your own and win for life. Let's get started. So let's start with the company. What does it do? Procter & Gamble is a consumer staples giant. Makes household products, personal care, and everyday essentials. Things that people need. These products people do buy regardless of the economy. And that matters to me because I want a trade that's not based on excitement. I want to trade stability based on a strategy. I use options, and when I sell options, I want the companies I use to have the conditions that produce a profit, but they don't have to be perfect. Procter & Gamble is a survivor. Procter & Gamble is one of those good stocks that's been around for a long time and fits the profile that I want to trade. Procter & Gamble is a big company. Everybody's heard about it. It's on my watch list of top stocks to trade. But the real question isn't whether Procter & Gamble is a good company. It's why should I trade it now? And we're looking at a trading view chart on the daily time frame. Let's pop this up to the weekly. A little less noise. 1 week. Spread it out a little bit. Now I'm a swing trader, and I look for those tops and bottoms, and then try to look at that trend in between and take that trend if I can find it. It's hard to do, to pick your tops and bottoms because nobody really knows where they're at ahead of time. But it looks like we were in a downtrend for quite some time with Procter & Gamble, and then it tried to go up, and then things happened like the Iran war and the tariffs, and that brings Procter & Gamble down a bit. The RSI, we had a crossover here that would have been predicted that rise pretty good using this is the MACD, I'm sorry. MACD, this is the RSI. That would have predicted the MACD would have predicted that rise pretty well. And it would be a little late to the game predicting the reversal down. This is the RSI. When it's below the 30 or 40, I'm starting to look for reversals around the 30-40 range. Looking for reversals. And likewise, when it's above the 70, I'm looking for a reversal down. So I have to ask myself, long term, is a stock that's going up or going down? Long term, it seems to have been going down. But I have a lot of faith in Procter & Gamble. And TradingView says that technicals are down, and look, the technicals are down. That's true. The analysts are saying buy. And they say there's a target of around 169. 169 is up here in the 170, somewhere around that area there. I'm thinking it'll go back to the 200-day moving average, which is about 161, 160. So my target is 160 over the next 9 to 15 months, which is about 11% from where it's at now, about 11% move. And I certainly think, based on this chart, that that's certainly achievable in 15 months' time, all the way out to June. A lot of time. Well, is it going to be worth my money, though? We have to find that out. So, for my criteria, the RSI should be under 40. At this time, I'm positioning myself for the weakness of this stock. Trading 142 could go to 160. The analysts are saying it's going to go to 170. TradingView says this stock is 30% below its fair value. Let's take a look at that. By the way, this is a snowflake. You can tell a lot of things from the snowflake. It's undervalued. It pays a dividend. It has very good financial stability over the last few years. Now, the two things I look out very closely is whether it's undervalued. I like that, but it's not required. But I like to see the earnings grow over the next 3 years. We'll take a look at those two things. Well, first of all, valuation. And this is simply Wall Street. I like it because it has little pictures. And we didn't need to go look at any further. We could look at and discern this from the snowflake. But the current price is around 140. And it should be trading at 203. So $160 is well within this range. And as traders find out that this stock is undervalued, that tends to, the more traders that find that out, it tends to make the stock rise. Looking at the chart where we're looking at the PE rate amongst this peers, we got Procter, Colgate-Palmolive, Kimberly-Clark, which is a stock that I trade a lot, and I know a lot of people are trading Clorox. We're right in the middle here. These three stocks people are trading. Now, what we would like to see for this future growth, we'd like to see it a little more steeper curve up, but this is climbing. This is fine for a big stock like this. You're not going to get the growth rates that some of the internet stocks or chip stocks have achieved. You're going to have slow, steady growth. So the fundamentals look pretty good for this company. The technicals don't look so good at the moment. That bodes well, though, for a reversal. So here is how Procter & Gamble scores so far. The sector is a defensive stock, and that's good. Its growth is positive and stable. That's good, too. It's undervalued. That's cool. Our side, the technicals for me, for watching for a reversal, it's under 40. That's cool. Checking with my broker, Interactive Broker, institutional ownership is around 45%. You want institutional backing, and our next earnings date is 24 days from now. But I'm trading 15 months out, so that's could be a positive thing for me. And I don't expect any kind of earning surprises. Nothing here is flashy, but that's why I like Procter & Gamble. Slow, steady growth. This is the foundation for a high probability trade. But there's more, and I'll cover that in just a minute. So I like Procter & Gamble, but I'm not going to buy shares of this stock. To buy 100 shares of Procter & Gamble at $142 is going to be at least $14,000. This is not going to be possible if you have a small account. But trading options make it possible to control 100 shares of this stock for a lot less. I don't want to tie up $14,000 of my capital. That's very inefficient, especially when I have goals of making 2% a month and 6% per quarter. So I'm going to look at a bull put spread, which is a bullish strategy. And it's one of the simplest strategies out there. And I think I only want to tie up around $500 on my capital. Let's take a look to see if that's even possible. Using a visualization tool called Option Strat, I type in my ticker. I want to go out 15 months. There's June. Since I think Procter & Gamble is going to reverse and go up, I'm choosing a strike right at the money, $140. I'm selling selling a put and buying a protected put $5 less. That makes my spread $5 wide. $5 wide times 100 is 500. That's my margin. And my net credit for this trade is $175. Now I could lose $300, and that's okay. And as long as this stock stays above 138, so we could lose a little ground here, and it dropped 3%, I still have a winner on my hands. And I can also take profit at any time during the 15 months. And we said we want to do about 160. So it's going to be right on here. Our profit line is going to be right in here. And I want to make about $100. So that's where I want to be. So if it gets to be $100, and maybe it go up, shoot up, I don't know. But I'm expecting to have this trade done in August, September of this year. If I'm patient, I don't need this stock to explode in it, and it's probably not going to. So if I only can make $80, that's roughly a 16% return on the amount of money that I invested or put at risk. This trade benefits from time decay and the elevated volatility of this stock. And if you remember, implied volatility is around 80. And that's because this stock keeps going down. So instead of fearing this drop in Procter Gamble, I'm going to sell it. Sell it for profit. Sell it for $175. The nice thing about this trade is my loss is capped. My position size is relatively small, around $500. It's definitely less than 2% of my account. And if things don't go right, and they often don't, I can exit anytime as well. Maybe at a 10% loss in the $100 range if I feel like this trade is going against me. So what am I risking? I'm risking about $100. This trade is not going to make me rich, but these are tough times right now, and we don't really know what's going on. This is something I can do for this type of stock and others very often, and it fits into my larger, repeatable process that I'm using to become a better trader. Stay above 138, 138 there. That's right on the reversal in the past. That's right on support. So as long as it doesn't get below support, I'm going to winner on my hands. Now here's where most traders fail. That banging is, I'm doing this video in my antique store, and that's the door opening and closing. Well, maybe it's my wife mad at me. I'm not sure. Now here's where the most traders fail, and that's in mindset. I'm comfortable doing this. I'm comfortable losing $500. And the fact that I just mentioned I have an antique store is I have other streams of income. In fact, I have to get and open that store fairly soon because weekends are our busiest time. So I have multiple streams of income outside of trading. So this is not going to make or break me. And that makes me calm, cool, and collective. And the fact that I do have other income means I'm not trading for excitement. I'm trading for consistency, return, protecting my 401k, that kind of thing. So that's my trade today. It's Procter Gamble. My technical said, hey, look, your RSI is below the 40. Better check for a reversal. My target price is about 10% higher than it is today. And I'm giving myself plenty of time. My criteria was I'll look at a trade if it's above 30. Sometimes it's 28 or 29, but that's not a lot of volatility because a lot of traders look for volatility greater than 50%. This company is growing at a slow pace, but slow and steady, and so is Microsoft. And if it reaches my return, I'll have a return of about 10 to 12% on my money. What do you think of this trade? Going up? Is the stock going up? Going down? Is this a reversal? Or has it got further? Are we going to be in a recession and going down further? Please leave a comment below. Remember to do your own due diligence. Learn it and win. Happy trading. We'll catch you on the flip.